So you just be alert.
Okay. First of block unit 1, unit 2, what business finance environment finance function means what, madam?
Business environment, like what is the function of finance while you are doing your business?
Yeah.
How finance plays an important role. This
Uh,
is what we have been studying in our previous two classes.
okay.
Okay. Now, we have seen what do you mean by finance and why finance is necessary, because finance is nothing but this is the lifeblood of our organization in order to start our business, right? Without finance, can you just move? You can't even take a single step, right? If you don't have cash in your hand, can you just take any step? You cannot take it. So therefore, finance is treated as lifeblood of your organization or lifeblood of any kind of a business. If you want to set up small business, also finance is required. Without finance, is there any other business? Is there any other business? No. So this is what we have studied in my previous two classes. Now, in today's class, we'll continue with financial planning. Is my PPT visible to you all?
Yes, ma'am.
Yes. So coming towards financial planning. Okay. What do you mean by financial planning? Financial planning is nothing but it is a detailed process that involves framing strategic financial policies for procurement, deployment, and monitoring of business funds. And also, financial planning is the plan needed for estimating the fund requirements of a business and determining the sources for the same. Okay. Now, in this financial planning, we'll just try to spread this word into two, financial and planning. Financial means related to finance. Now, what do you mean by planning? Planning is nothing but this is the first function of your management, right? Before you start any business, any venture, everybody must have a plan in your mind. Without planning, can you just take a single step? If you don't have a plan in your mind, immediately when you just get up from your bed, you will have some plan in your mind, like today, what you have to do it, right? Am I right? So in your business also, planning is the first and foremost function that you have to implement so that you can move forward. Okay. Now, financial planning is something where we are trying to speak about estimation of fund requirements of our business. And also, here we are deciding what are the sources that are present from where you can acquire funds. Okay, there might be many sources. Somebody might be giving you loan. Okay, private institutions will be there, or banking institutions will be there from where you will be taking a loan. Our governmental agencies will be there. Like nowadays, you have got this Pradhan Mantri Kendra Yojana scheme, right? From wherein they are giving 1 lakh to 10 lakh amount for the people to start their business, right? So these are the different sources of funds where you can acquire your finance to start up your business. So financial planning is nothing but here we are just giving a blueprint. What do you mean by a blueprint? Blueprint is nothing but a design or a plan that you are giving it to your business. Okay, so this financial planning, we are studying about detail. In detail, we are studying about what are the strategies that we are taking in order to procure. Procurement means acquiring the resources. Deployment means implementing your resources. Whatever the things that you have acquired, how you are deploying it. Okay, how you are implementing it. After you implement it, you are going to monitor your business funds. Okay, this is nothing but this is your financial planning. Okay. For example, before we are just trying to initiate any new business. Okay. What is the first and foremost thing? The organization will have a focus on their mind. Okay. So we have a proper plan in our mind how you are going to estimate your funds, from where you will be getting your funds. Okay, sometimes, for example, your plan will be like, I'll just want to see my business for 1 year. If it is growing, then I'll be expanding my business or I'll be moving forward. This is just a focus in your mind. So as per this focus, you are coming up with a plan, you are coming up with a blueprint is nothing but frame of your business. Okay, so this is nothing but this is your financial planning. Okay, now next, what are the objectives of financial planning? Basically, you have got four objectives of financial planning. Number first is ensuring availability of funds. Second, estimating the time and source of funds. Third is generating capital structure. Fourth is avoiding unnecessary funds. Okay. Coming towards the first one, that is ensuring availability of funds. What do you mean by this? Ensuring availability of funds, from wherever you are getting the funds, from wherever you are getting any kind of finance, ensure that you have enough source of your finance in your hand. Okay, because what is happening, the financial planning is trying to excel in different areas of how to generate your funds. Okay, and we are making them available whenever we want in our business. Okay, for example, for estimation of funds, we have some long-term assets. Okay, long-term assets are nothing but your land, your machinery, your building. Okay, apart from long-term assets, you'll be having working capital requirements. So before you start any, what do you say, any project, or before you start your business, ensure whether you have enough funds in your hand or not. Ensure that you have long-term assets in your hand or not. Then only you just move forward. Otherwise, don't take any kind of a risk. Okay, coming towards the second, estimating the time and source of funds. Okay, now what do you mean by this? For example, you are just taking a kind of a loan from any banking institution. Directly, does the bank give you a loan? The bank will not give you a loan like this only. Like, it will take, I mean, all your papers. He will see, I mean, whether you are in a position to pay it afterwards or not. Okay, so bank will be giving you some time limit. So within that particular time limit, you have to repay that loan amount. So estimate that time. Okay, and also how you are going to repay that loan amount also, that is also more important, because time is a game changing factor. We don't know at the next moment of time what will happen, right? Nobody can predict it. Time is not in our hands. This is a kind of a game changing factor that plays an important role in your business, right? So delivering your funds at the right time and at the right place. Okay, this is very much crucial. This is very much important. Okay, are you getting? So the first is, first ensure whether you have availability of funds or not. Second, from wherever you are taking your funds, see to that you are in a position to repay that amount in a particular time frame. That is estimating the time and from where you are taking your funds. Third is generating capital structure. What do you mean by this capital structure? Capital structure is nothing but before you start your business, okay, you should have money in your hand. This money is nothing but we call it as capital, capital of a company in order to start your business, right? So this is a kind of a promotion that is required in your business. Okay, for example, I just want to start up a boutique business. I have got nearly 50,000 in my hand. This 50,000, I'll be calling it as capital to start my business. This is the proportion that is there in my hand to start my new business. Okay, so either my business will be going for a short term or it will be moving on for a long term. Okay, and the last objective is avoid unnecessary fund. Okay, don't take the funds from wherever you are getting, because from wherever you are getting the funds, if you're trying to take it, at the end of the day, you have to repay it. Okay, if you're not able to repay, then you will be in a debt position, right? So this should not be the case, because this is a very important objective of the company, to make sure that the firm or the company does not raise any unnecessary resources. You should not waste unnecessary resources. If you are facing any shortage, okay, just try to search for other sources, okay, or else search for surplus of funds, because the firm does not earn any returns, but ultimately it adds the cost to the company. जितना भी पैसा हाथ में रहो, you people understand Hindi?
Yes, ma'am. Yes.
Yes, ma'am.
If in between, if I speak in Hindi, are you able to understand?
Yes, ma'am. You can.
Yes, ma'am.
See, here avoiding unnecessary funds में जितना भी हमारे हाथ में पैसा हो, okay, तो क्या होता है at the end of the day, nothing will be there in our hands. जितना भी पैसा है पूरा will try to invest in our business, right? So the more money that we have in hand, the more priorities will get increased, right? Am I right? This is a human tendency. The more we have it in hand, the more we try to spend it. The less you have it, the less you can save it.
Yes, exactly, ma'am.
So this is one of the important objectives. So whenever you are trying to establish a business, okay, if at all you are just getting 100% profit, okay, see to that you are just saving your 70% of profit, and only 30% you are trying to invest. क्योंकि if you are trying to spend whole 100%, आज business होता, कल नहीं होता. So tomorrow what will happen? You will be in a dilemma, right? So that should not happen. So just save a little amount, because the same thing goes on with your practical life also. The more you try to save it, the more future earnings will be there for you, right?
Yes, ma'am.
So this is one of the important objective of your financial planning in order to start your business. So these are the four important objectives of financial planning. This is very important from short answers point of view. Okay, what are the objectives of financial planning? So you can just write this for ensuring availability of funds, estimating the time and source of funds, generating capital structure, avoiding
Avoiding distance.
unnecessary funds. Okay, middle, I mean, the body of the side headings, you can write it in your own. Okay, just remember the side headings and highlight your side headings properly in your external paper. Okay,
Yes,
now
yes, ma'am.
next, coming towards nature of financial planning. Okay, nature of financial planning serves as seven factors. Okay, what are those seven factors? The first is access to business environment. Second is clarify business vision and goals. Third, determine the capital requirement. Fourth, decide capital structure. Fifth, frame financial policies, maintain adequate funds, and long-term view. Okay, these are the seven sources or nature of your financial planning. Coming towards the first, that is accessing business environment. Okay, as I have already discussed, financial planning involves proper assessment of your resources. Okay, resources means what? Resources किसको बोलते हैं? The people who are working in your organization. Okay, the staff who are working in your organization, the employees who are working in your organization. For example, you have a company. The people who are in sales, if you are putting that particular person into finance, will he be able to give you the output?
Ye- Yes, ma'am.
हाँ, एक सेल्स के बंदे को लेकर अगर आप फाइनेंस में डाल दिए, तो आप
No,
आउटपुट एक्सपेक्ट कर सकते हो उसे?
no, ma'am.
You cannot expect it, because he doesn't have any knowledge about finance.
Yes, madam.
So proper utilization of resources should be there. Division, first of all, is division of labor and proper utilization of resources. That is how you are able to access your business environment. That should be done in a proper assessment. Then only your business will be moving in a smooth manner. So here basically we are evaluating nature of operation that you are performing within the organization, about which departments are present, and as per the departments, how many number of resources you are allocating to that particular department. Okay. Second thing is clarify business vision and goal. This is one of the foremost thing. Without vision and mission, okay, do you people move? For example, you people have opted this BCom. Okay, why did you opted this? Because there was some vision in your mind. You have got a mission that you want to accomplish it. That's the reason you have opted for BCom, right? So in a similar way, each and every business or each and every individual, each and every entity will have its own vision, will have its own goals. Okay, so here we are just trying to aim the objectives of business before we try to formulate any plan. Okay, for example, you people are doing your BCom. If you are doing BCom, how it will help you in future? How it will help you in future in getting proper job? Am I right? So when you have opted for this course, you have got certain plan in your mind that you will be getting good job after completing your graduation course. Because of this plan only, you have opted this particular course. Am I right? So similar to that, in order to accomplish your vision and mission statement, you will have your certain goal in your mind, how you are going to accomplish it. Okay. Now next is determining the capital requirements. Okay. Now how you are able to determine your capital requirement? Determining the capital requirement. Okay. Now, how you are able to determine the capital requirement? First, you have to analyze what is the capital that is required in your business in order for your business to run smooth functioning. So here, to determine capital requirement, what are we trying to calculate? We are trying to calculate both fixed assets, that is long-term assets, as well as the working capital need. Just now we have discussed now. Do you remember? How you are able to determine your capital requirement? See, here we have discussed now. Generating capital structure. How you are generating your capital structure? Based on your long-term assets or your fixed assets and your working capital requirement. Right? So in the same way, determining the capital requirements means how you are able to go up with your long-term assets or fixed assets and working capital requirement. Now next is decide capital structure. Okay. Now, what do you mean by capital structure? Capital structure is nothing but this is a kind of a proportion that we are able to divide debt and equity in capital of business. Debt, here you are making a ratio of debt and equity ratio. Okay. So basically it involves deciding the debt to equity ratio both in short term as well as in long term. Okay, so capital structure, basically it is defined by debt by equity ratio. Once you calculate your debt and your equity, you will be coming up with the final value of your capital structure. Okay, now next is how to frame your financial policies. Okay, coming towards your financial policies. What do you mean by a financial policy? Financial policy, basically, we are concerned with how you are able to raise your funds, how you are able to make your investment, okay, how you are able to calculate your overheads, your administration costs. Okay, all these things are included into your financial policies. So here in financial policy, we are trying to frame how you are able to control your cash movement, whether it is lending your cash or borrowing from your business. Okay. For example, from a company, a person wants to take a loan. Okay. On what basis a loan is given to a person from a company? Based upon your performance. Right? Am I right? If your performance is good, then your company will be giving you a loan. And once the company will give you a loan in a certain duration, basically, when a company gives you a loan, in a year only, the company will try to clear it off, because every entity, every company will have its own financial year. You know what do you mean by financial year? Financial year means end of year. Either it will be December or it will be March. 31st December or 31st March. So whatever the lending and borrowing, whatever that has been taken place, okay, from a company, everybody has to clear before the financial year ends. If you are not able to pay to your company, what does your company will do? The company will try to deduct it from your salary. So each and every company will have its own financial policy, how it will try to give loan either in short term or in long term. Okay, is it clear to you all? Now, apart from framing policies, you have to maintain adequate funds. Okay, what is the necessity to maintain funds? Because at any moment of time, okay, you have to regulate the right amount of fund at the every point of time. If you are not able to implement it, what will happen? Your business will be coming towards downfall, right? So if you are maintaining adequate funds, what will happen? It helps you to maintain proper amount of funds by raising it from different sources or distinct sources at any moment of time. Okay, and the last is long term view. Okay, basically financial planning is concerned with long term policy only. Okay, so here we are just trying to detect the pattern, how it is moving in long term, and what are the major effects that are caused in the future when we are trying to provide a loan or when we are trying to take a loan from other banking institutions. Okay, so this is about the nature of your financial planning. Now, next, coming towards scope of financial planning. Okay, it serves in five. How? First, you have to ensure availability of funds, right? The same thing here also we have discussed. Next, you have to reduce uncertainty. Third, avoid unnecessary fund. This is also one of the objective that we have seen, right? Then balance between funds inflow and funds outflow, right? And the last is facilitate growth and expansion program. Okay. Coming towards the first, that is ensuring availability of funds. This is already discussed. Again, I don't have to tell you. Okay, so before you start any kind of a business, you have to ensure, what are the different availability of funds from where you are taking. Either are you taking from any private institution or you're taking from any banking institution. Okay, so you should have enough amount of cash in your hand in order to start your business. Okay, reducing uncertainty. What do you mean by the term uncertainty? Uncertainty means what? For example, I have a company, okay, and my company is going in a very good position. At some moment of time, okay, at some moment of time, suddenly there is a crash into my computerized system. Okay, this crash, I'm not aware of it. It may happen now your data will be lost from your computer. Did you heard any time? Did you heard any time that the data has been lost from your computer because of crash, because of power failure or any other problem? So in such cases, what will you try to do? You will not have any other option to retrieve your data back. So to avoid that, you should have enough backup. Backup in the sense you will try to store your data in some secondary device. So in the same thing, in your business also, just to avoid any uncertainty, just to minimize the chances of uncertainty. You have to deliver the right amount of funds at the right time. Okay? Because proper financial planning will happen if you properly plan it. It avoids any circumstances to the growth and continuity of your business. Okay? Next is avoid unnecessary funds. This is already I told you in your objective. Don't take any unnecessary funds from any institution so that at the end of the day, you will be in a position wherein you will not have enough cash in your hand to repay it back to your banking institution, whether it could be a long term or it could be your short term. Next, proper balance between funds inflow, funds outflow. Funds inflow is that is coming into your business, and fund outflow that is going out from your business. So here our focus should be on maintaining proper balance between cash inflow and cash outflow. Okay, that means proper amount of liquidity should be maintained within the organization. Otherwise, what will happen? The financial planning, it regulates all your cash transactions from wherever you have lent your money or from wherever you have borrowed your money because of your business organization. Okay, so there should be a proper balance between your cash inflow and your cash outflow. Okay. Now, next is last is facilitating growth and expansion program. Okay. Each and everybody will be having a goal in your mind so that you will try to achieve that goal. For example, your business is running smoothly. If your business is running smoothly for the whole life period, will you be looking onto the same gauging of your business, or you will have some plan in your mind to expand your business?
Expand our
Everybody
business.
will be happy. दिस इज आवर मेन गोल. अगर आपका बिजनेस अच्छा चल रहा तो आप वैसे ही लेके जाते लाइफ लॉन्ग. उसमें कुछ चेंजेस लेकर आएंगे. यू विल ट्राई टू इम्प्लीमेंट सम चेंजेस इनटू योर बिजनेस. This changes is nothing but either you try to go on for innovation purpose, or you try to bring some creativity into your existing business, or you will try to expand your business by introducing more products. Right? So Harika, everybody should have an aim in your mind to have a growth and expansion of your business. Okay, so ultimately, this will fulfill your long term growth as well as it will also expand your business plan. By doing this, you will have enough amount of availability of the required funds every time that supports your organization to attain your long term goals. Is that clear? So these are the 5 scopes of your financial planning. See to that you have availability of funds, reduce uncertainty in your business so that you should have enough amount in your hand, cash in your hand. Next, avoid unnecessary fund, maintains balance between cash inflow, cash outflow, or fund inflow, fund outflow, and also facilitate growth and expansion program. Okay. Now, next, coming towards steps in financial planning. You have got 5 steps in your financial planning. Okay. What are those 5 steps? First is assessment of financial condition, goal identification, developing strategies, implementation of plan, monitoring, and re-evaluation. These are the 5 steps in your financial planning. Okay. Now, coming towards the first, that is assessment of financial condition. Here, first you have to begin your plan by conducting a proper review of your current financial status of your business. Okay. For example, you have to first analyze your balance sheet. You have to first analyze your income statement. What do you mean by income statement? Income statement is nothing but your profit and loss account and then your cash flow statement, so that you will be getting a clear picture of your business, clear picture of your financial health, how your business is moving. Unless and until you have a proper assessment of all these three, tools, that is balance sheet, your income statement, and your cash flow, you will not get a proper idea in your mind whether you have to expand your business or to go on for growth of your business. Okay. Second is goal identification. After you assess your financial condition of your business, okay, identify your SMART goals, SMART. Okay. Now, what do you mean by this SMART? Here, I'll just try to write it. SMART. SMART goals. Did you heard about the SMART goals?
Yes.
What does, yes? What does S stands for? Specific, measurable, attainable, realistic, and time constraint. Okay, these are the five criterias that should be there in your goal identification. I'll repeat: S specific, M measurable, A attainable, R realistic, and T time constrained. Within a particular time frame, you have to attain these goals. Once you attain, can you all hear me?
Yes, yes, ma'am.
Yes. So once you attain the SMART goals, this will ensure that your financial planning process has a clear direction. It has got a purpose. Okay. If you don't have the SMART goals, then you will not have anything in your hand. That means you will not have a proper direction of your business. You will not have a purpose of your business. Okay. Coming towards the third step. Your third step is about developing strategies. Okay. Once you try to assess your foundation, second, you're trying to attain your goals with respect to SMART. Third is how to develop strategies. Okay, so how you are able to develop your strategies should be in line with your objectives of your financial planning. Just now we have seen your objectives, right? Ensuring availability of funds, okay, proper utilization of resources, don't take unnecessary funds from any other banking institution. Just now we have seen these objectives, right? So your strategies should be in line with your objectives. Okay, so that you will be able to decide on the best method how you are able to increase your revenue. Okay, in order to increase your revenue, you have to reduce the cost. You have to manage your debt. You have to utilize your resources effectively. Okay, then only your business will be growing. Is that clear? So, how you are able to develop your strategies? By increasing your revenue, reducing your cost, managing your debts, and also proper utilization of your resources in an effective manner. Okay. Now, next is coming towards implementation of plan. Okay. Whatever the strategies that you have developed in your previous step, you are just putting those strategies into action. That is, you are just implementing those strategies into action. So, basically, this involves how you are allocating your resources, how you are assigning tasks to different team members, how you are setting your timelines in order to achieve your targets. Okay, this is what your action plan should be. Are you getting? That is how you will be allocating your resources. What is the task that are given to different team members? And also you are setting proper timelines to achieve your targets, because in each and every business, the person who are working, they will have proper targets. They will have certain targets to complete it. If at all they are completing it, they'll be getting good appraisal. If at all you are not completing, then at the end of the day, you will be in a problem. You will be at a risk, right? And the last step is monitoring and re-evaluation. After you complete all these 4 steps, last you have to monitor whether that you have implemented until 4, whether it is working properly or not. Okay. So here financial planning is something, this is an ongoing process. That means never ending process, you can say, wherein it requires constant monitoring. Every time you have to monitor your business. Okay. Regularly you have to review the progress. Okay. Whatever the goals that you made, whether your goals are reaching towards your targets or not. If not, make certain adjustment to your strategies. Sometimes it may happen हम जो सोचते वो होता नहीं, right? So in that case, what we try to do, we'll try to change our plan. I'll give you a small example. For example, you people are sitting in a classroom. Okay, when you are sitting in a classroom, you have to follow certain protocols. You have to follow certain rules and regulations. It's like while class is going on, you are not supposed to move out. For example, suddenly fire took place. Will you be sitting in your class only?
No.
We are not supposed to move out while class is going on. What do you try to do? Immediately, you just try to step ahead. You try to move out from your class.
Yes, ma'am.
Okay, this was not there in your rules and regulations. But because of this plan, because fire occurred, you are taking certain step, right?
Yes, ma'am.
Yes, this is nothing but this we call it as contingency planning. Okay,
Oh,
as and when required. If at all you have to suddenly change your review, you have to suddenly change your plan, you have to change it. Don't think any further. So each step in this process is so well designed that a cycle is being followed, a cycle of continuous 1 second. Yes, madam, good afternoon. Yes, madam. Yes, sorry. So we were discussing about your last plan, right? Last step. So this financial planning is something. This is a continuous process, a kind of a cycle of continuous improvement that helps in your business not only to meet your requirements but also to meet your expectations. For that particular thing, you have to yes. So these are the 5 steps that are involved in your financial planning. Are these 5 steps clear to you all? Can we move on to next?
yes, yes, ma'am.
Now, next is what are the key areas of financial planning? Okay, key areas means important areas of your financial planning. It's your investment planning. I don't have to discuss this in detail. Just have a look. Investment planning, tax planning, risk management. Then you have your retirement planning and estate planning. Estate planning is nothing but going up with your, what do you say, fixed assets. Okay, for example, your land, plant, that refers to your estate planning. Okay. Now, this is very much important. Tools of financial planning. Okay. Tools of financial planning. This you can expect in your long answers. Okay. So these are some of the tools of your financial planning. That is budgeting tool, financial statements. Then you have your saving and investment tool. Then you have your risk management tool, goal setting framework, debt management tool, and financial ratios. These are some of the tools of your financial planning. Coming towards the first tool, that is your budgeting tool. Okay. In your budgeting tool, what are you trying to do? You will try to create a detailed, what do you say, income plan, income and your expense plan. Okay. This is similar to your profit and loss account. Okay. This is something you call it as your monthly budget. Okay. In your practical life also, you have got some certain monthly budget. Within that budget, you have to look into. If your budget is exceeding, then you have to lower your expenses, right? Or sometimes it may happen, for example, whenever a person might receive his or her salary, there will be a certain rule, 50, 30, 20 rule, we call it as 50, 30, 20. Okay, what do you mean by this 50? 50 is your expenses, 30 is your saving, and next 20 is for your future. Future in the sense where you are trying to invest on some other resources. Saving is different. Saving is just securing a kind of a money. Investing is something where you are trying to put into some asset. Okay, so there is a certain rule which we call it as 50, 30, 20 rule, we call it as 50 by 30 by 20. Okay, so your monthly budget, your what do you say, profit and loss account, that is where you're calculating your incomes, where you're calculating your expenses. Okay, these are some of the tools that comes under your budgeting tool. Now, next coming towards your financial statement. Financial statement, what does it deals with? It deals with your balance sheet. It deals with your income statement again, and also it deals with your cash flow statement. Balance sheet means what does your balance sheet will try to show you?
Equal
What
amount.
does equal amount? What does it try to show you? Even in profit loss account also equal amount, right? Even in your trading account also equal amount. But why do we prepare balance sheet? What is the purpose of preparing balance sheet? Balance sheet is nothing but it just try to give you a snapshot of your assets, your liabilities, and your net worth, right?
Yes.
Am I right?
Yes, yes,
Do you
ma'am.
agree? Yes. In each and every sheet, you take it your profit and loss account, your balance sheet, your trading account, it will show equal amount on both the sides. Okay.
Yes, ma'am.
But why it is prepared? What is the purpose of balance sheet? Why do you prepare it? To show your assets, to show your liabilities, to show the net worth, what you possess. For that purpose, you prepare balance sheet. Right? Why do you
Yes.
prepare income statement? What is the purpose of income statement? What is the other name for income statement?
Financial
Other name
statement.
for income statement, profit and loss account.
Financial.
Okay. In profit and loss account, what are you trying to show? You're trying to show your income and your expenses over a certain period of time. Am I right?
Yes, yes.
Yes or no? Coming towards your cash flow statement. What does your cash flow statement will try to show you? It will predict your cash inflow, what is coming into your business and what is going out from your business. Okay. So these are the three statements that comes into your financial statement. That is your balance sheet, your income statement, and your cash flow statement. If you want, just make it a point over there. You can write running notes in your budgeting tools. Your income statement will come, your monthly budget, or any rule that is 50/30/20. Whereas in your financial statement, your balance sheet, your income statement, and your cash flow statement. Next is your saving and investment tool. Okay, saving and investment tool is nothing but your what do you call your retirement plan, your mutual funds, if at all you have, or if you have any bonds, okay, fixed bonds you can say, or emergency fund, okay, that you will keep it aside so that at any moment of time, if any emergency comes, you can make use of it. That you call it as emergency fund. Retirement plans are nothing but your PF, Provident Fund, right? EPF also, Employee Provision Fund. Okay, your mutual funds, that is the investment that you make it from your from the part of your income. You're sharing your shares also, which we call it as stock. Okay, that is also a kind of an investment. Your fixed bonds, these are also a kind of an investment tool, right? So these are some of the investment and savings tools. What comes under your risk management tool? Risk management tool, insurance. Can you insure your life? Can you insure your health? Will you
No.
insure your property? No, this is a kind of a risk. Okay, nobody knows what will happen in the next moment of time, how our life will be, how our health will be, what is going to happen to our property. Nobody knows it. So your life, your health, your property, these are your risk management tool. Okay. Next, you have your goal setting framework. Goal setting framework is nothing but your SMART goals. That is specific, measurable, attainable or achievable, then realistic, it should be relevant, and the last is your time bond. Okay. Next is your tax planning tool. Tax planning tool are nothing but maximizing your deductions, your credits. Okay. There might be certain bonds which are tax free. Okay. Those comes under your tax planning tool. Next is your debt management tool. What do you mean by debt management tool? How you are able to repay your loans. That is, we call it as there is one term, loan repayment calculator, we call it. Loan repayment calculator is one of your debt management tool. Okay. Sometimes it may happen you will not be in a position to repay the whole amount. So what you will try to do, you will try to request your banker to reduce some amount. That we call it as debt consolidation strategy. Okay, debt consolidation strategy is something where you are requesting your banker to reduce some amount of money from your loan. Okay, so these are your debt management tools. Financial ratios. Financial ratios are nothing but your liquidity ratio, your debt equity ratio, your debt to income ratio, where you are assessing the financial health of your business. Okay, where you are assessing your savings rate. That means how much amount of income that you have saved over a period of time. Okay, so all these are your types of tools of your financial, different tools of your financial planning. Is that clear? Now,
Yes, ma'am.
next, moving on to what is capitalization. Until now, we have seen your business finance, we have seen your financial planning, we have seen your tools of financial planning, and also we have seen what do you mean by capital. Now, what is this capitalization? Okay. From my screen, I'll just read out a definition. Capitalization is an accounting method in which a cost is included in an asset value and expensed over the asset useful life rather than expensed in the period the cost was incurred. That you refer to as your capitalization. Okay. So, in simple words, I'll just try to explain you. Capitalization is nothing but where you are trying to show your capital, because this capital is nothing but this is an accounting method where you are trying to show your cost that is included in your asset value and which is still have a life of it, that is which is still useful in your business. Okay, sometimes this capital is a kind of a quantitative assessment. Quantitative means in terms of money, we are calculating it. Okay, which goes on for long term debt or which goes on for retained earning. Okay, what we have seen is capitalization is something. This is the basic component of your financial plan to start your business. Okay, wherein it refers to total amount of capital that is employed in your business. Okay, so here we are just trying to determine what is the pattern of your cash, what is the pattern of your finance, how you are able to determine your different sources of your cash. Not only the total quantity, but also the quality plays an important role. Okay, that means where you have invested, in which type of bond you have invested, in which type of stock or in which type of share you have invested your money. Okay, so not only we are just concerned about the quantity, but also quality plays an important role in your capitalization. That means the basic decision, the important decision with regards to your amount of capital that is invested. Okay, that refers to your capitalization. Okay, next you have types of capitalization. Basically, you have got two types of capitalization. One is related to finance. Okay, now coming towards the first. Can you all hear me? Can you all hear me?
Yes, yes, ma'am.
Yeah, because here it is giving unstable connection. That's the reason I asked. Okay, so you have two types of capitalization, accounting and the next is finance. Now, what do you mean by accounting? Accounting is nothing but the matching principle requires companies to record expenses in the same accounting period in which the related revenue is incurred. Okay, now here, what do you mean by this? Whatever the assets that may benefit your business more than one accounting period, those are often treated as your fixed assets, like your buildings. So the cost that is incurred on these fixed assets, these are recorded on your ledger account as your asset historical cost, right? So therefore, the costs that are capitalized are not fully expensed against earnings. It is still in our accounting period, but this is not a type of an earning that we are getting, right? So in this case, the company can make large purchase, but expense should be low when you are going it for a future course of time. That is depending on the type of property, depending on the type of plant or equipment or any kind of a machinery. Based on that, you have to just give the amount of capital that you are investing in your business. Okay, and you should have a proper record of it in your accounts. Next is finance. Okay, finances, capitalization can refer to the book value, cost of capital, which is the sum of a company long-term debt, stock, and retained earning. Okay, now there we have made with respect to your fixed assets, whereas here we are just going up with the book value, that is the market value. Okay, because the market value is dependent on the price of the company's stock. Okay, are you able to get it? So market capitalization is nothing but the number of outstanding shares that you are maintaining for your company. Okay, that you are going up with your finance capitalization. Okay, is it clear? Until here, is it clear to you all?
Yes, madam, it is clear.
So the remaining part, that is sources of capitalization, that I'll discuss it in my next class. Okay, this is a very vast subject, you know. Fine?
Madam, now you share this PPT, madam, this block
Yes,
in chat box.
I will share
మొత్తం
it. I
finish.
already told you, Navinash. I will
Uh,
share all the PPTs of all 5 blocks on the last day of my class.
uh,
Okay? Okay?
okay,
Fine?
madam. Number, madam. Mobile number,
I'll
madam.
share the PPTs. I'll share the important questions. I have taken, I think. Meanwhile,
Yeah.
I'll just give you my number also in your chat box.
Okay.
Second. If you have any doubts, you can mail me.
Okay. Mail and WhatsApp also.
Yes. Already I posted.
Mm. 177.
Okay. So
Today
I'll
so
just
less
end my
are there,
class over
madam.
here.
Today so less are there in
Sorry.
class. So today so less I think
Today?
class. So many less number of students.
Ah, yeah, less number. Why?
No, no, madam.
Tired?
Tired means no. Somebody are
Then?
having.
No, ma'am. Actually, those are people are listening financial computer applications class, ma'am.
Okay, okay.
This
Acha,
subject
this
is
is
only
elective
for become
subject.
general only, ma'am.
Become general, madam.
This
Okay.
one only become
Okay,
general
okay,
group.
okay, fine.
Your
Ah, I
mail
got
ID
it. I
is
got it.
Omer Tamina 30@gmail.com.
Yes, umair30@gmail.com, and this is my contact number.
Omer Tamina.
Yeah.
You are assistant
Okay.
professor, madam.
Sorry.
You are assistant
Yes,
professor.
I'm
Ambedkar
pursuing my
University.
PhD.
Okay.
Yes.
Okay. Where are you from, ma'am?
Okay, then.
Okay.
I'm from Hyderabad. You
Okay.
people are from?
I am
We
also
are also
Hyderabad only.
Hyderabad.
Here only. I will stay in ECIL. Oh,
Okay, okay, fine. That's good to hear. Okay, then I'll continue in my next class. Okay,
okay.
fine.
Your
Have a
number
nice
nine
day.
one double
Thank you
seven
all
three
for
six
attending
nine
my
five four
session.
nine. I think. Okay.
Thank you, ma'am.
Thank you, madam.
Yes, yes, Avinash.
Your number,
Okay,
I
thank
think,
you. Thank you.
madam, 9177369549.
Yes.
Oh, yeah. Okay.
Yeah, tell me.
Your mobile number only. If any doubts, is WhatsApp also this number, I think, no?
Only WhatsApp you do it.
This number.
Hmm.
Doubts also call.
Call, rare cases you call me.
Okay.
But WhatsApp I'm available. Okay.
Okay, madam.
Okay then. Thank you. All the best.
Thank you. Thank you.
Have a nice day. Thank you.
Okay. Mamata garu. Hello.
చెప్పండి అవినాష్ గారు.
ఆ, ఇది మీ మొబైల్ నంబర్ ఉంటే ఇస్తారా?
ఒక్క నిమిషం అండి, ఇది యూట్యూబ్ లింక్ కదా, నేను కాల్ చేస్తాను మీకు. ఇది లైవ్ కదండి.
ఓకే, ఐమ్ సారీ.
నేను మళ్ళీ కాల్ చేస్తాను మీకు.
కాల్ అంటే అదే నంబర్ కదా, 810 అని ఉంది, అదేనా?